Hey, everybody. Good morning. Good morning. Happy Tuesday to you. Hope you're doing very well. Good morning to my European friends. Good evening to my Australian, New Zealand friends, or friends in Asia, Hong Kong, wherever you might be listening. And good night or really good morning to the Americans, North and South, that might be tuning in. We got to revisit the trend. A lot of great stuff happening with Bitcoin as always, but as you know, I like to just drill down again and again and again to try to elaborate what's actually happening with Bitcoin and how it's different than TradFi. Sometimes when I do these streams, I think of, perhaps better ways to describe what I'm speaking about. So I know there's a lot of iterations. So let's look at Apple again. Just stick with Apple for a second. All right. So here's stock price over, 45 years. If we shoehorned a power trend in, all right, so here's what it is on log scale. We shoehorned a power trend in, it would not look correct at all. Right? It grows faster at the beginning, slower later. Clearly, Apple, over the long term, is an expo trend. Exponential, you can verify that it's exponential as a straight line on log scale. Now, I don't know the future like everyone else, so that's why I would always caution you to your hard-earned dollars. If you're going to put them into sats, I think that's probably a pretty smart move. But if you're going to put it into a newsletter that says they know where the price of anything is going, be careful. I'm not a trend or a TA trader, but obviously this straight line has a lot of bearing about what Apple is doing over the long term. All right. By the way, it's a 21% CAGR, but over the short term, it's not very helpful. Right. Kind of looks like some support here. That's cool. But then from post pandemic, we're in an elevated situation. So let's try to drill down a little bit more about what's happening in the short term. So, same thing, Apple over 45 years. Same trend. I mentioned this yesterday, but I think my charts were a little bit too complicated, so let's just simplify it. How can we understand what is a little bit of a better trend to give us an idea of what Apple's actually doing day to day? Supply demand, but also just usage of the product. Well, price is the best signal. So let's look at a shorter exponential trend and see if we can get a better R squared. Okay, so I've done that for you right there. All right. Solid black line is a short trend. I mentioned this. I think I've even shown it. In fact, I know I've shown it over the summer, different variations of this. You can be very cute with it. And again, I'm sure that the people at Renaissance Capital, as I've mentioned, a lot of respect for what Jim Simons did using applied statistics. You can do quite a lot with applied statistics, which is just basically looking at probabilities. All right, more than just head and shoulders or whatever lines on charts. Actually doing the math can give you a really solid grounding of what might happen. But clearly, if you just use the eye test here, especially since jobs came back in the late 90s, and especially since the iPod, Apple's been on a new curve from what it was doing in the 80s and 90s. All right, so the 80s and 90s, we're doing 21% CAGR. From the mid 2000s, we're on a 28.5% CAGR. Pretty monstrous CAGR right there. Amazing. Why this CAGR? Well, this gave us the best R squared. Okay, so like I said, you can be cute with it, but what I found, just very briefly, is if you go here, you started on the 27th of July, this is a weekly chart, you'll get that highest number, that highest percentage R squared, 97.6%, which means from this point, the price is 97.6% more likely to move around this solid black line, not the dotted black line, but the solid black line, than the average. All right. So it's a pretty good fit. And notice if we pulled it back even farther, we would grow faster, right? Because if I started it like here, I'd get an even faster trend line, but that's a worse R squared. Okay, so again, I'm not trying to be too cute. Anybody can play around with price and run these trend lines, but once you sort of set in a base, you understand what's happening, you can find a good trend. It doesn't mean the trend will always continue this way in the future. Absolutely not. This is a monstrous trend. I remember Bitcoin runs at a 42% compounded growth, but on a power curve, so it declines. This is constant. All right, 28.5% constant since 27 July 2005. Pretty amazing. All right. So that sort of gets us to the next step. All right, if you want to think about this stuff. So we have, is Apple an exponential curve or a power curve? Absolutely exponential. The whole world in TradFi thinks in exponential. Interest rates are exponential. Yield to maturities, IRRs, that's all an exponential function. So, of course, Apple's exponential. But then we got to get the better trend. All right, so here we got it. Take it back to mid-2005. This is the best fitting trend for Apple. Where are we now? A little bit under. All right, but notice, by the way, if I put the all-time trend, completely worthless. We haven't touched that. Remember, I talk about this with Bitcoin, right? Like, measure the right trend. We haven't touched this trend since 2019, the all-time trend. So it doesn't mean we won't touch it again, right? But it's not really what's happening. So we can kind of forget it for now. Doesn't mean we won't touch it again, but we can forget it for now. So now let's focus on this. All right. During the silly days, meme stocks, extra money printing, we were above this. And now we're below it. So now from here, we can start to do the rainbow and look at the percentile bands about where it is, okay? So that's going to be here. Remember, I'm not a quantile regression guy. I like to keep it very, very simple and do multiples, right? So, and I have this with the Bitcoin chart, right? I like to look at any time when the new trend or the trend that we're using gets set in, sort of gets established. Wherever the trend was at the time, was the price over or under trend? Okay, so what I'm showing here is an evolving short-term trend moving into the all-time short-term trend, which basically just means the fixed into the future. So that's the difference. Again, why is it a straight line all here in the past? I'm just showing you the 20-year trend, right? It started in 2005 to now. It's a 20-year trend. That's what it looks like. But as that thing sort of set itself in motion, it will be a little bit jagged. We see this with Bitcoin too. But the reason I do that is because I want to give you a very simple multiple over or under trend where we can be and where is that in the range, the realm of possibilities, the universe of possibilities. All right, so, and what we see is, let's just zoom in. Let's just go right to today. Where are we right now? This is a weekly chart, so this is last week, Wednesday. Snapshot these Wednesdays. 258 bucks. Below trend. Trend's 300 bucks. All right. So let's go down and see how far below trend we are. Okay, so it's not the 10th percentile. It's not the 20th. But between the 30th and the 40th only. So it's still very low. All right, so again, let's just say 35. We're only in sort of the 1/3 probabilistic realm. 2/3 of the time, the price is higher than where it is now for Apple. And I actually even showed this over the summer. Can't find the video or whatever. So I think I presented it in a different way. It's the same deal. It might have been a slightly different starting date. I might have started at January 2005. I can't remember. But, you know, to try to be somewhat scientific, I'm giving us the highest R squared that we can generally find, 97.6%. And from where we were in the summer, say, we were at super cheap. Now we're not as much. Again, doesn't mean we can't fall right back down to this one. I have no idea. I'm not a head and shoulders TA, lines on charts guy. I like to kind of just show you guys the universe of possibilities here, so you can decide if something might be a good investment or not. If we take out all the noise, let's just go between the 10th and the 90th. There's our range. Let's look at the price delta. All right, so the trend is 301. Again, we're below that. Going down to the 10th percentile would be 0.7x the trend. 0.7x, $215. Going to the 90th percentile would be 1.2x. Keep that in mind because we're going to go to Bitcoin after. So the range is 30% below the trend or 20% above the trend. Okay, 0.7x to 1.2x. It's pretty tight. It's a pretty tight band. And, if you stayed there, it would have been pretty good. Doesn't mean there wouldn't have been some scary moments. For example, here in 2016 or here at the start of the pandemic, or even here in, I remember this drop actually in the end of summer 2018. Crypto markets were also puking here. It also doesn't mean, it's not like a top caller, right? So let's look at the times when we were above the 9. Again, never financial advice, but if you want to trend follow, just hang on to the stock, let it go all the way. And even if you say like, oh, well, let's use the 9 as a trailing stop, that might not be a good idea, right? Because let's look at the 9 here. Say when we just started to go below, zoom in here. Let's say you got scared that it was crashing back to the mean or something. Price was $121 in May 2021. So you started to get a little bit scared. Again, I don't really, I'm more of a Bitcoin guy, so I'm not too interested in stocks at the moment, but it's the same idea. Might have been a good idea in this case to just wait it out a little bit more, and then you would have had a good year and a half. Actually, like 2 years. No, May 2021. Yeah, full year. Full year where it looked a little bit dicey, falling below the 9, but it just kept going. And then it went back to the mean. But even if you say you wanted to sell here as a trailing stop, it's 133. What's 133? Let's look back to where it was before. That's still above the 9 here, which was 120. See the 9? So, and then look, this also just goes back to the buy and hold strategy with stocks. I mean, even here in January 2023, which was you can see a pretty big dip, gets us close to the 1. What's the price? 124. That's still above the 9 here in 2021. So, buy and hold with stocks seems kind of okay. And yeah, we're below trend now here, pulling the trend line down every day that we're below this black line, but that's what it looks like. But this is a much better trend, notice, than the discrepancy here. All right. Long-term trend really is something to mostly be forgotten about at the moment. And I imagine, although I have no inside information, but when Jim Simons was making his strategies, he would probably look at shorter and shorter term trends, apply the statistics, look at the probabilities, and see if he should have been in or out. Because he's on record of saying that's what he was using for his fund. So that's how, again, never financial advice, but that's how we can look at TradFi and what it does, even if TradFi is a tech company like Apple. Every stock on log scale is a straight line. It moves exponentially. All right. And if you just want to make a conclusion on what we see right now, it's cheap as far as it's under the trend, the 20-year trend. Doesn't mean we can't fall back to this one, but this trend also grows pretty significantly. Let's look at the weekly change. It's $1 a week. Sometimes it can be $2 a week. $1.50 to $2 a week. That's what the Apple trend does. All right. So having said all that, let's now go back into the mindset of what Bitcoin does. Oh, that's in gold. Sorry. This is my favorite chart. I think the channel's best chart. Pretty remarkable trend. And it just amazes me every morning if I wake up, check the price, that we're very, very close. 114. When I pulled it in the model, my trend line is 118 bucks. Can't say it enough. Notice this is log scale, base 100, although it doesn't matter the base. Okay, so each unit is 100 times higher than the last, each line. It could be base 8, whatever, it just doesn't matter. You will not have a straight line on log scale if it's a power curve. And we can clearly see that Bitcoin does not move in a power curve. Sorry, we can clearly see that Bitcoin does not move in an exponential curve. It moves in a power curve. It's not a straight line on log scale, as opposed to the stock market, all stocks, which are straight lines on log scale. Money supply, debt, GDP, it all moves exponentially. Bitcoin does not. So I would contend again, just reiterate again, that this is the problem with following TA, chartists, technical guys that are trying to do straight line channels for Bitcoin over a long period of time. Over a short period of time, they might get away with it, but over the long period of time, you're just completely out of the ballpark. You have no comprehension of what Bitcoin is doing. Good morning, Bob. Thank you for tuning in. Up early for you. Hope you have a productive day in the district. And as usual, I wanted to show more charts of this, chartists showing, TA guys showing a straight line on log scale for Bitcoin. I keep forgetting, but let me see what I got here. I think I can do it from... Well, just have to search again. So here's one. This is quite an old one. But just as an example, this is completely meaningless. Seems like at first glance it might be something. All right, but Bitcoin does not grow on log scale like this. And again, there's just been some really funny ones, but some people change the lines a little bit. Like they don't go from the very beginning to the to now. Like for example, this one. And these are again older. This is way old one. But it's okay. So let's call this bull market 1 extremely steep, then bull market 2 more shallow. Okay, it's fine. But again, that's just not, Bitcoin is not on a straight line over the long term. Its power curve works completely different. It's just completely different. I can't express it enough. With the stocks, with gold, no problem. Drawing straight lines on log scale. That is actually what it's doing. That's not what Bitcoin's doing. So I'll say it again and again and again. Likewise, it's good with coffee, right? Yeah, I mean, if you saw, that's a good way to put it. They could have at least used log for their straight line TA astrology. I'm right with you there. I had another one, even another one from a friend of mine I've shown before, but too many charts, losing things in the ether, so to speak. But and Twitter's functions, search functions, are like terrible these days. But if you just search for some of them, like Bitcoin channel, long term. Yeah. You might get somewhere in the in the uh, in the short term. All right, so this one's from 2024, and as we know, price did indeed go up to 126 over the summer. So it's not out of the question. But again, this is, I don't know. It's like, why would you put the channel here, not down here on this wick? Sometimes you do catch the wick. You don't catch this wick. I've never been a fan of it. If your trading friend does better than 50% each day, then I guess, you can follow what they say. But if not, I would say stick with the probabilities. Look at gold in a second. But again, Bitcoin has been easier to trade, I would say. I would argue because of the nature of the curve, right? Like going above the 9, you just don't stay there a long time. Right? And we can look at our chart that shows us above the 91st, second, third percentiles. That's not here, but you might, like, if you sold here back in April, May 2021, you could have been a little bit mad if this price ran back up, get some fear. But it's the gravity of taking you back to the power curve is too strong with Bitcoin. It's not that way with Apple or with other stocks, I would argue, because they can, it's a completely different curve. It's a completely different phenomenon in log space. So you can go up a long time. And by the way, my next project to show you probably tomorrow is let's do this analysis with gold, because everybody sort of wants to see what's happening with gold these days. So You know, I still only have a very simpler one. Very simple one. Good morning, MP. Good evening, Tim. Welcome. So gold should be the next one up after Apple to really analyze. This is, again, long term with gold, which actually does hold a lot of bearing, right? Unlike Apple, again, which long and short is completely, it's clear that, um, I mean, it's not meaningless, the long term trend, right? It's fine. But it's just over the short, the last 20 years, it's just not very helpful. It's not it's not a very helpful trend. 250 bucks or about 220 bucks above it. But with gold, oops, we're in a very interesting time. Because long term is actually still pretty good. All right, R squared is not amazing, 79%, but you can clearly see with the eye test that like for gold here, if I wanted to get a better R squared, like over the very short term, I could look at just here. Let's look since 2022, since the price started to rise. But that would be, again, highly speculative. Because gold clearly can go way up and then way back down. Exponential trend. We are at the peak of it. But like I said, I'll do this analysis like I did with Apple. We'll find the best R squared over the short term, and I'll run it. But I can't see gold has a lot of legs after this. I mean, again, it could double. It could double. It could do something like this, where the price is, 2008. By the way, it kind of seems eerily similar, right? Like gold's at this point, we're at an all-time high with gold. We fall into a financial crisis, it falls, and then the price of gold doubles. But then, they start up the financial repression. Everybody poo-poos gold. It's also true Bitcoin was flying at this time, but gold just goes sideways for a decade. Maybe that happens again. Identical. It still could mean the price doubles, but as for the price like quadrupling or going to 50,000, these are some strong long-term trends to contend with. So I'd have to play around. Like I could test the R squared from say here, see where we are. That'd be very helpful to a bullish view. I could also test it from like here. So I'll just see which R squared is the best, like I did with Apple, over the short term, and then we'll see. We'll see what it says. So that's my thought about all the craze in, the gold markets or whatever, Bitcoin compared to stocks. It throws a lot of people off, and I really think it's just going to be super interesting to see what happens in the fall here with this chart moving into the winter. As I showed you yesterday, I do got to get this chart up that APSK did. It's so awesome. As he said, we could tunnel through. All right, it's totally possible. And his governor is I think it's like the 5th percentile, not the 5th. It's basically it's the power curve. It's the OLS times 0.05, which just moves down in log space. To where you find a decent support. And I think he uses the 0.05 times the power curve, and then runs his max and mins here to make this cloud. You know, I'm still not going to say it's over until it's over, but it's possible we tunnel through here and just ignore the, cycles are over, or it's possible we have a bump. Tom Lee said 250K. This is a funny comment. I'm thinking something subtle. There's a lot of comfort here, in my opinion, through all the noise, through Bitcoin going to 1 million or whatever crazy things you see in some YouTube thumbnail. I think there's a lot of comfort, and it lines up very well with, which chart I'm going to show next. This chart. There's just no way mathematically we get to, $1 million Bitcoin and stay there. The financial system couldn't handle it, and Bitcoin couldn't handle it. Right? We're doing better against FedWire. It used to be 300 million times, 400 million times smaller than FedWire. Now FedWire is only 145 times bigger than Bitcoin. But it's still enormous. 1,157 trillion versus 8 trillion. So I just don't see the need to freak out. This is why I've become anti-newsletter. Because I can, with firsthand experience, vouch for you or tell you how many gold newsletters I read that said gold is just going to take over the world after the financial crisis. I really cut my teeth starting about here in a lot of this stuff. Gold was looking exciting for a couple years, and then you can rest easier with the probabilities. It might be that Bitcoin goes above the 9, but there's no historical precedent that we go above the 9 and then just hang out there. Or we go above the 9, then we go to the 99, 9.9, whatever with my numbering, and we just hang out there and start growing. It's not what happens. I think in the best case, which I don't think is going to happen, is something could happen like Apple. And in my opinion, this would be more negative than positive. Is you have sort of a long-term trend, right? And then something either good or bad happens to Bitcoin in the realm of TradFi. More people start buying or more people start selling for whatever reason, and then you just set a different trend. Okay, in the case of Apple, it's been a higher trend in the last 20 years. So maybe something like that. So it could be that maybe somehow we set a little bit of a lower trend here. But there's no indication of any of that at the moment. It's just the statistics don't show that story at all. They show this nice, beautiful rainbow curve. They don't show any of the hype that Plan B talks about. And it's not an exponential asset, so why even bother with those figures? That's all I wanted to show, guys. I'm not going to lecture. We can look at Bitcoin in terms of gold. This will be fascinating as well. All right, this is still pretty wild. Bitcoin is so cheap in terms of gold right now. Wait, why didn't that update? Let's check my files. Missing 6 days of data. Sorry, let me check. Regardless, 6 days not going to make much of a difference. And then, as I've said before, you know, even if you caught this point right here, 9-10 ounces of gold in the worst days of the 2022 puking, FTX, everything, the actual price of Bitcoin now still costs you 26.5 ounces of gold. Forget about the trends. That's just the actual price. A lot of the investors I used to work for said you can be a pig, but don't be a hog. Actually, one guy said that, but I thought it was a good saying. It's okay to be a pig, don't be a hog. I mean, Peter Schiff thinks, you know, gold's God's gift to mankind still, and you're still paying 2.5x more per one Bitcoin now than you were paying less than 3 years ago. Even though gold is looking great on this chart, you know, Bitcoin is way undervalued. Gold is overvalued on this chart. It's still 2.5x more per one Bitcoin now than it was here. So this is going to be super interesting. If we revert to the mean on this gold chart, you know, we could have those $300,000, $400,000 Bitcoin prices. I'm not saying, again, that's for sure, but why isn't this updating? Again and again, I constantly remind you guys, this is not why I have the charts up on my website. Yeah, precisely. Precisely. Do I have it or do I not? I do. What's going on here? Maybe it just needs a refresh. Let's give it a second here. This is a fun one, though. Totally possible. But by the way, even like just with this chart, like a million is nearly impossible. Probabilistically, a million is just not, it's not there. It's not in the numbers. All right, did this show up or not? Yes, it did. Okay, so let's look. It's going in the wrong direction for gold, for the gold bugs. This might have been your chance to Peter Schiff to buy Bitcoin at a 20th percentile move. Okay. At 24.76 ounces per Bitcoin now, after only, 10 days, 29 ounces of gold per Bitcoin. It's a hard asset to contend with, even if you're gold. You're now 3 times worse than you were in December 2022 if you're in the gold universe looking at Bitcoin. You're 3 times worse. Even though this looks overall great for gold, as far as the rainbows look, the trend is still moving against you. So we're gonna have to keep looking at this chart. It might even be now, though, Tim. Again, not financial advice, but this chart is telling you right now, Bitcoin is not getting any cheaper in terms of gold. That's a hard, like, I'm not a financial advisor, but I think all of these lines on the charts boil down to a couple numbers, right? 2017, 1-to-1, 1 ounce of gold to Bitcoin. Maybe the best would be here, 36 ounces of gold to Bitcoin. The worst in recent years, 9, 10, now 30. And that's crazy in itself, right? So think about that 29, 30. You know, that would be the top end of the rainbow here, meaning quite expensive at the time, but it's only getting more, Bitcoin is only getting more expensive in terms of gold, just like it is with dollars. I look at this chart and I can't see how they do not. I really don't. Another thing, by the way, notice how this is a power curve. This is a good point, right? So let's do this. This is Bitcoin in terms of dollars, power curve. Now let's do gold in terms of dollars, exponential curve. All right, so when we go Bitcoin to gold, we're literally comparing a power and an exponential. What does it look like? It's power. So what that's showing is that the power side of the equation dominates. It's way stronger statistically than the exponential function, which again further shows that Bitcoin is an asset that grows in power. So that gives me further confidence that we're looking at this the right way, that Bitcoin is the stronger asset here. It's the asset that grows faster. Even if on a different trajectory, it's the fact that this curve is not exponential, but power, tells you all you need to know. And again, I have that chart where I go into dollars here in the future, but it's kind of annoying, actually, or not annoying. It's just complicated. So imagine by the end of the year, we go to 67 ounces of gold based on where we are right now. Since right now, we're half of the gold trend, right? But the dollar trend is right on trend. That means that the price would actually double on the dollar trend if the gold trend would go back to the mean, i.e., go back to the black line, right? So if we actually go back to 66 ounces of gold per Bitcoin, which is trend, it would be a record, by the way. We've never hit that, right? No, because this grows so fast. If we go to 66 ounces of gold by the end of the year or whatever, that portends not a 125K Bitcoin price, but a 250, because we're at literally half the trend here. So it's very exciting. My opinion, these numbers are only exciting for Bitcoin. And just probabilistically can't get any worse for Bitcoin. I do my Midwest disclaimers. Never say never. Of course, it could get worse, but we're statistically extremely cheap. Extremely cheap as far as gold goes. So, yes, I agree with you, and I think they will. Peter Schiff hates all of these charts. You just imagine what sort of a mental asylum he's in. I first heard about Bitcoin about here. Again, unfortunately, not buying. But I believe Peter Schiff was also podcasting about this time, heard about it. Literally for free if you had gold. Fractions of an ounce of gold. 10% of an ounce. Almost an ounce, actually, during the peak of 2013. And just we've never looked back from this. All these ones showing up on the chart. Gold could double and Bitcoin could double, right? We could have this chart double in dollars. We could also have Bitcoin double in dollars. Anything's possible. But probabilistically, this looks very expensive. And this looks very cheap. In both of those scenarios, I think it's good for Bitcoin. Assuming reversion to the mean. Anything else? I think that's all the charts I had prepared. Like I said, I'll do this analysis with gold so we can not expo versus power. This is, everybody should know, it's only power trend is Bitcoin. This is just not make any sense. But this one would probably be helpful. Let's do a long and a short and try to find the best R squared for gold in dollar terms, which would probably be, if I had to guess, I mean, the best would be right here. Let's pick this bottom, or even this one. But that would still be risky because, like, this is a way different trend than ever. Maybe I'll pick this bottom. I'll just have to look and see what's the best R squared. Maybe here. And we'll see. Yeah, also great point. It's an incredible thing to think about. Also, I'm sure you've seen some of these tables, like if you look at way down the line, 100 years from now, 2125, the block reward is, clearly an achievable stack today, like 0.17 Bitcoin or 0.11 Bitcoin, whatever it is, pick your date. It's a good time to be alive. Yeah, I completely agree. If he would ever even notice a chart like this and try to say something, it would just, the numbers speak for themselves. He's just LARPing, getting engagement, like you said. Again, look at these numbers, and let's assume they're reasonably accurate. Let's even take out all the noise. On the very, very pessimistic side, you're looking at, by next year, 31 or 37 ounces of gold per Bitcoin. It's 30 right now. Sorry. 29.32. So conceivably, if there was a big crash in Bitcoin next year and a big boom still in gold, you could get back to this number. Either the 20th percentile would take you there, or the 10th percent if we have to wait a year, right? Presume simply it would be the same thing. We have, big boom by the end of this year, and then a huge bust over the next, which is a long bust over the course of a year. You could get back to this gold valuation of hitting the 10th percentile, which again is not a guaranteed event, but we did do it here. Then you'd get back to 30 ounces of gold. It's amazing to see. If you actually look at the numbers and just think about the probabilities, it's amazing to think about. I don't see 9 or 10 ounces of gold anywhere here. Let's look at the 0th, which is just incredibly low, like insanely low. You do see that up to the end of next year. But this is like a one-time thing. So I never really show it. It's just happened here. This would be an extreme, extreme low. And usually it happens, right, in the early days when you're sort of painting this stuff out. So I don't see that as very likely. I think usually you're fine looking at the 10th percentile as a case for bottoms. So Peter Schiff keeps waiting. The best he could get, is 30 ounces of gold per one Bitcoin. Then a year after that, 40, 50. Also a great point. Yeah. And then I think Peter redid some of them, right? How an economy grows and why it crashes. Long and short, we're looking pretty good for Bitcoin. It'd be very rare. It's not impossible. Maybe gold goes on some tear for 3 years and Bitcoin drifts. And we start to seriously pull this curve down, right? So maybe we do stay at, 20, call it even 15 ounces of gold for a long time per one Bitcoin. It's not impossible. But what this shows you right here is that probabilistically that's very low. And due to the 15-year nature of this curve already, let's look how long it takes for it to go up an ounce. All right, so December 17th. Let's just say December 15th. Let's move. The 10 percentile will take about 3 months. No, sorry, 2 months. 2 months to change from 1 ounce to the next. It's even faster on the curve itself, right? So let's look today. 29, October 28th. Let's see when it goes to. I'm sorry, I got to look at the curve, not the price. 63. right, so it changes here, November 6th. Yeah, it's less than a month on the curve to move up 1 ounce increments. So based on that fact, again, it's all evidence that points me in the direction that we revert to the mean here. Doesn't mean it's not impossible that we stay way below here for a long time. It's just probabilistically does not seem like that. All right. But exciting nonetheless. You know, when your favorite newsletter writer says Bitcoin's going to 1 million, actually, let me put in the let me put in the top 9. Give me a second. So again, we've been above the 9 every time, above the 90th percentile. If we presume it's happening again, and it could, here's our probabilities on the exciting curve. Right now, this rainbow is only above the 90th. All right, I've shown this a lot, but let's just run through it by the end of the year. Okay, you do see 1 million there, notice at the very top, but actually, let's look at where we hit before. So the max of the last cycle was about number 6. Okay. So that means that it'd be, in my opinion, very low that we would get above these lines. These are the really red hot, amazing probabilities to hit. We hit them in prior cycles, but we did not hit them in the very last cycle. Did not hit them at all. So what that means is, if we again presume that we have a boom here at the end of the year, which we might, there's a 3% chance we get to 394, 2% that we get to 480, 1% chance we get to 580, and a 0.0001% chance that we get to 1 million. And these multiples stay the same, 3.1x. So getting above 3x, very difficult. The multiple of above trend at the time, above 3x, extremely rare. All right, we did it here. We did it here. We did not do it here. So there's your multiple. There's your number. If we're at 125 by the end of the year, 3x extremely unlikely. 375 is the max. If it goes above it, we're all going to be quite happy. Not going to stay there for long. By the way, I don't have it handy. Great options book I was given at Fred Krueger's Bitcoin Alpha. I'll share it tomorrow. Very bright, smart options advisor trader from Thinkorswim. When you get to these levels, I think it makes a lot of sense, especially so easy now with the instruments, where you could put on some nice options to limit your upside, but capitalize on the downside. Never financial advice, but think that's going to be it for me today, guys. Just 1 hour on the stream. Unless anybody wants to see anything else. It's hard to not be excited based on the historical trends. I guess last thing, again, to be cautious. Even though I'm painting out these numbers and probabilities, again, one could imagine that all of these booms were just as good as we'll get as far as overextensions from the trend. It's also totally possible. It's also totally possible that markets sort of figured this out. A lot of people have heard of the power curve now, although in my opinion, as I tried to talk about at the most of this video, most people still don't even know the difference between a power curve and an exponential curve. But let's just say more Wall Street eyes are on it. More people are using it as a governor for, trading ranges. Possible that we just stick to this. So that's my word of caution. I think in either scenario, it's going to be interesting. And we will know all together by year end if the cycle will play out this year or not, or this time or not. Thank you, MP. Thank you, Tim. Thank you, everybody, for watching. Ping me if you have any questions on the curve, want to see other charts. More stuff is coming. More on-chain stuff, TradFi stuff. We'll get it all together in a more comprehensive way soon. All right. Take care, everybody.